Hi, this is Mac with PriceActionTradingSystem.com, and this is Wednesday, February the 1st. This is our chart lesson for Wednesday, and I'm just going to start out here. Today was a little different. This might have thrown some of you. Hopefully you caught it before the day was over, but this is what a lot of people would describe as a spike and channel, and you see what happened was prices spiked up real quickly and then went into a more normal trend and basically formed a channel. And if you copy this, drag it up to the top, you'll see that it was pretty much a channel up through here, right along through there. And it faded off. It faded off. We actually had a break right here, a two-legged retest that just basically retested the trend line, and then we sold on off for the day. And so it could have thrown some of you because you might have been trying to draw your, and I believe if you did, it probably still worked out. If you drew your trend line off of those first couple of swings right there, it would have had you right up through there. And you can see we had our break right here and then a couple of legs up to a new high, and then we started selling off. So regardless of how you did this, you should have come to the same somewhat general conclusion. But if you would have had this trend line right here by drawing it off these swings, which sometimes you get when you have a trend that starts off this strong, that's just too steep. The most healthy trends are about 45-degree angles, and you're much closer to that right here than you are right here. That's just a little bit too steep. And so that's sometimes a clue. Anytime you get a trend this steep, it usually doesn't last very long. And if you measure this right here, it's probably going to be this one. And you drag it over here. We'll just see how close that is. It's not real close. Just trying to see if it was. Sometimes even though the second leg is much flatter, you'll still get kind of a measured leg, but we didn't really get that there. So, but yeah, a lot of times this leg will end up looking just almost exact. Actually, I didn't measure. I don't think I measured that right. The leg would be I think if we go from right there, that would be the low. Now, it still doesn't work out. But anyway, hopefully you get the point is that even though prices spiked up here, we went into this, we got this trend line that runs right across here. And that should have alerted you. Drawing it right here should have alerted you to this entry. And if you should have probably drawn this on here too, just to try to find it, because you can see that's pretty much a channel. You can see you got your highs up here and you got your lows down here. And so hopefully you could see that almost with your naked eye before you even drew that on there. But the market opened right in here, and regardless of how you had this trend line drawn originally, even if you didn't have this on there, this was a fairly obvious setup right here because you had this low running right across here. And you can see we formed a double bottom and prices reversed right across there. I would have had mine drawn on those last few closes. That's a failed break lower that reversed and turned higher. And so then it was off to the races higher again. And so you should have found this setup regardless of how you had your trend lines drawn, because this is really, we were really in a trading range when the market opened this morning. And that's it right in there. And then you probably could have moved that up to right there later in the day. But that's where I would have had that. And that could have alerted you to possibly sell there. But really when the trend is up, especially after a move this high, the best bets are not to be looking to fade the breaks higher. You should be looking to fade the lower breaks. Remember, whenever the market trades up into a trading range, the odds are it's probably going to break out of the top of the trading range when it successfully breaks out. And when the market's trading down, like right here, and goes into a trading range, you see it failed going out the top and it's successful going out the bottom. So just remember that. And again, we traded up into this little trading range. See how this prices came up into this trading range? Look what happened when we broke out. It failed out the bottom. So just remember that rule. That's an important one, is that prices generally will continue on in the direction they... Okay, I had to take a short pause there. I had an interruption here in the office, and can't remember where we were now, but I think we were talking about when prices trade into a trading range, they're generally going to break out in the direction of the trading range. Unless, now, one thing that can happen occasionally is if the trading range happens at a very strong resistance area, like this has been resistance right across this 1300 area for a while. So if you go into something right there, it could reverse, but generally you'll have your trend line break. So generally the rule is if prices trade into a trading range, whichever direction they were moving when they traded into it, that's generally the way they're going to break out. So just kind of keep that in mind. Is like anything in the markets, nothing is ever written in stone, and the market can do whatever it wants. And so by not having a bias, we're usually better off. However, having said that, if you understand what the likelihood is of happening, such as the rules that we set up, and one of those rules is if prices trade up into a trading range, they're probably going to break out going up as well if they're going to break out successfully. So just keep that in mind. And like I said, nothing's written in stone, so the next time it doesn't work, it doesn't mean you did anything wrong. It just means markets never do anything 100%. What we try to do is learn we try to put the odds on our side, and the odds generally are going to be that if prices traded up and went in this trading range, they're going to break out and go further to the upside. So excuse me there, I got a little choked. But anyway, let's go back and look at where the, hopefully now that you see how my chart is marked, hopefully yours was marked somewhat similar. And if it was, I'm going to go ahead and mark the key entry points. And you can see if yours would have been like mine. There's one, there's two. And this was probably one right here when we broke below the trend line. But we know we're going to try to get a retest. And when we broke out right here below this area and then reversed, then that kind of gave us a little failed breakout and a nice entry. And if you look, it's really a two-legged move. Hopefully you can see that. Got one leg, then a reversal, and then a second leg. So that, on a bigger picture, that's a second entry long, going back for a retest. And it really, when it broke above this trading range, this double top or kind of trading range here and reversed, this was another good entry point. So this was one more key entry point right there going to the downside. And one of the clues that you could have alerted you to possibly this break, and I've talked about this before, but let me put this back on here. When you have your, that was your trading range, or not your range, but your trading channel, and you notice we made this double top without getting there and then broke it. That's a sign that the market is losing strength. And of course the market sold off from there. And by the time we got past right here, it was too late in the day, so I'm not even going to talk about that out there. But there's your key entry points. There were 1, 2, 3, 4 of them today. There weren't many trades, but the ones that did work were pretty good, and you should have made some pretty good money. This was actually a good long right here, and hopefully you can see why. It's a second entry long, but the main reason is there's a little trading range here, and we had a little failed break lower right there and trapped shorts, and it reversed right at the EMA and went higher. And then once we made this double top, it was, and got back below the EMA here. That was another sign that the market was really getting weaker and was probably going to sell off before long. I would have thought we'd probably had a successful retest with a new high, but it didn't happen and market sold off. So sometimes even though that's 2 legs up for a retest. But one thing that I will say is generally when you don't get a new high and you get a retest that's a lower high, then what you'll see is this move right here is leg 1, and this move here is going to be leg 2, and we may go higher from right here, and that's what it appears it's trying to happen. Just measure these. There's leg 1, and then that's going to be leg 2, and it did overshoot, and but it was late in the afternoon, and people were probably running for the door there. And my guess is now we may come back and go higher, but we'll see. You don't want to be trying to guess the market. You just want to watch what it's doing and follow along and trade accordingly. So there weren't a lot of entries today. 1, 2, 3, 4, 5. Maybe 5 or 6 entries, and there's more than that because there's shorts right here. You could have shorted that right there. Anytime you get a double top, you probably could have entered again right here. There's another good entry. That actually is pretty much a key entry point right there because this trend line was in place. So there's another one, and I wouldn't have entered in this. You might have entered with this failed second entry short here. I don't think it would have worked either, though. It's just too many overlapping bars through all this stuff. And if you enter in here, you're entering in the middle of a trading range. So they're just not really good entry spots. You might have gone short right there. I don't like that setup either because of all those overlapping bars. So even though there are trades in here, they're not great trades. They're just not great setups. And, a lot of times you get a good setup off the other side of the trading range, or not the trading range, but the trend channel. For some reason, I want to call this trend channel a trading range all morning or all day, but it's risky doing that because you're counter trend trading in a market that's pretty strong. And anytime you do that, you're taking a big risk. And you can see there were some scalps in there, right? You probably could have scalped. You definitely could have scalped off this one. See, this one would have, any of these would have failed on you. If you'd held on, you probably would have gotten out. But it's just not it's not worth the risk. And so wait for these key entry points, which are going to be along the trend line and the failed breaks lower or failed breaks higher. And in most cases, because the trend is up, the best ones are going to be the ones that come off the low side and not coming off the high side. They're suspect coming off the high side. Okay, I had another interruption there, but I don't even know where I left off. I apologize. It's been hectic. It's first day of the month. A lot of people needing things from me and so forth here in the office. But anyway, hopefully you see these key entry points and why we took them and what we're trying to do. And I think I'm going to go ahead and wrap this up. Again, there were more trades than I thought today. There were 1, 2, 3, 4, 5. There were 6 really good key entry points. And you got to be patient to wait on these. Now, there were some other trades in here, but I didn't mark them because they weren't really trades at the key entry points, which is what we want to concentrate on. You want to take the high probability trades, the ones where the odds are on our side, and those are going to be during pullbacks to the EMA or pullbacks to the trend line until you get your trend line break, and then you're going to get a retest, which happened right here. Wasn't a very good retest, but all the same, it's 2 legs up and a retest of the trend line. And you'll see that sometimes. Sometimes the prices will only retest the trend line, but we may get a retest way down here that comes up and tests this high and then sells off. So the market doesn't always do exactly what you expect or think, and that's one thing I want to drill into everybody. No rule is 100% when it comes to trading. Now, the rules that we have work most of the time, and they're and they put the odds on your side, but they fail sometimes. And so sometimes trades that you think should work, like this trade right here, I would think this looks like a great setup right here with a trap on a break. But as you can see, the only thing that would have kept you out is all these overlapping bars right here, and most of them are dojis. And so that's one rule you better stick to, because a lot of times this could break out and go a lot higher. But you see what happened here. It just broke higher and then trapped everybody and went down and then ran everybody's stop and trapped in some new shorts down here and then ran back up and did the same thing up here again. And that's what the ES is famous for, is trapping people on the wrong side and taking their money. So anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.